was a fairly tepid kind of a recovery in terms of the IIP. July IIP did contract by 10.4%, and in fact, if you look at the overall expectations, well, the IIP is certainly slightly lesser than expected, and most of the economists do state that it's going to be a fairly gradual recovery from the current levels until we reach a state of normalcy. In fact, MK does state that the fresh COVID-19 related restrictions in some parts of the country did slow down the overall pace of IIP, and they're also stating that the production activity, according to them, the economy stands at 87% of the adjusted pre-COVID level, and we did see some amount of positive growth momentum in tobacco and pharma products. Do note that besides the IIP data, if you look at the manufacturing PMI, that did improve during the month of August. But if you in fact look at the other high frequency indicators, we are seeing some amount of a negative trend there. For the month of August, we're also seeing that Google Mobility, power generation, e-way bill, all have declined during the month of August. We're also seeing that the auto production has declined in the month of August, and credit growth remains fairly tepid at just around 5.5% in the month of August. So all these high frequency indicators, according to various economists, do point out that yes, it's going to be a fairly uneven recovery from the current levels, and August IIP may also be in the negative zone. ICRA also believes that according to them, the IIP was slightly weaker than expected, and the IIP at this time only points out to a fragmented recovery. It will be a slow grinding recovery for the economy before we return to normalcy. And we're also pointing out that despite continued improvement, capital goods and consumer durables have underperformed, reporting a very steep degrowth of anywhere around 23% each during this month, which is pointing out that the discretionary portion of consumption and investment will recover from the crisis only with a substantial lag. So yes, these two categories we should be watching out for. Edelweiss believes that flattening of the India virus curve is fairly important for sustained growth in terms of the IIP, and India economy definitely needs a second round of fiscal stimulus in order to see a sustained broad-based revival in the domestic demand. We're also seeing that the rural economy has been fairly supportive, but would that continue or not, that should be watched out for. In fact, besides the IIP, we should also be watching out for the today's CPI data for the month of August, which is seen at 7% according to the ET Now poll estimates. In fact, the CPI is likely to stay elevated or over 6% for a fifth month in a row. Food inflation is still likely to remain fairly high. To note that the WPI did see some amount of modest decline in inflation, but overall inflationary expectations in the economy is still likely to remain fairly high, and as such, most of the economists do expect RBI to stay on a pause in the very near term. But having said that, they do also expect RBI to cut rates by 25 to 50 bips over second half of this fiscal, but that rate cut may probably only resume from December policy onwards. So yes, it is kind of an uneven and a very gradual recovery for the economy. We need the support of, we probably need fiscal stimulus. Government of course has limited space, and also RBI rate cuts would be essential. But as of now, yes, a fairly slow IIP recovery, or a fairly slow recovery in terms of the economy, and slightly elevated inflation is still expected.